Good evening, guys. Welcome back to Sunday Scans video recap. We'll run through kind of some thoughts and some of the things typed up in the Substack newsletter. But yeah, it's January 18th, 2026. Markets close tomorrow on the 19th for Martin Luther King Day. We joked in the group that the Santa rally is dead, and this is now henceforth to be known as a Martin Luther King rally at the beginning of January, which supersedes, is way better, way more exciting than the supposed Santa rally that is just over exaggerated, over talked about. Anyways, I welcome you to the past 12 sessions, 11 sessions of the Martin Luther King rally, which ended on Friday, or maybe it begins on Tuesday. I don't know yet. We'll see. We'll wait for the market to decide. Anyways, as you might notice, I changed background. I used to be on this, this all white right here. I was on this for, a year and a half or so. Anyways, I changed it to this look, and I'm really excited about it. I just needed a fresh little background for my eyes. Kind of the, just this little fresh look to, reignite my my analysis. So I'm super excited about it. I don't know, something just simple like this can make certain different things stand out on the chart, especially after you watch, right, hundreds of thousands of stocks scanning throughout the week, each day, really. Some of them can kind of blend together. So, getting a new little background color change like this actually does, I think, a lot of good, underestimated, subtle change that you can do. Anywho, we're going to run through the newsletter here and what we typed out. I'm going to send this out after we're done here. But I do this nice little introduction, just a nice little joke. World-renowned Sunday Scans, by the way. Recipient of the Substack Golden, whatever. No, last week was fun. There was a lot of different movements, right? The space stocks, memory names, some of the defense names. Basically just a continuation of what we've seen since the beginning of the year, since Friday, January 2nd. Most of that just kind of continued throughout the week. There's a couple things that I noted. I keep listing kind of the sessions of the year, 11 out of 252. And there's this quote from the Clement Ang video on Trader Lion. I hope I'm pronouncing that right. If I'm not, I apologize. On Trader Lion that was put out this weekend. He was actually quoting Oliver Kell, which is smooth is... or slow is smooth and smooth is fast. And I thought that was a great line because throughout the week I was mentioning this stat right here, which is also phenomenal. So again, that's slow is smooth and smooth is fast. Okay. Throughout the week I was mentioning that it only takes 6% per month, 6% return compounded to reach 100% gains for the year. Right, 6%, 2% days in each calendar month will get you to achieve 100% triple-digit gains performance in your account for the year for 2026. And I think it's just a much more calming and healthier and smoother way of thinking about performance. Kind of breaking it into what really is quite a minimal achievement of 6%, but when you kind of stack that consistency and compound it, how impressive it can be over a period of a year. And that stat that we were talking about this week, and then hearing Clement on the Trader Line interview say that Oliver Kell quote, slow is smooth and smooth is fast, really just kind of simplified the overall kind of mindset of this message. And then I talk about a little bit of kind of the market environment conversation that was pretty heavy last week. There's a lot of people kind of stating their opinions on the market environment, how to gauge it, when to aggressively engage the market, when to back off, how to kind of dabble in between those two ends of the spectrum. One of my strongest and probably more controversial opinions about this, and just a recommendation to traders in general, is to stop overanalyzing the indexes, the QQQ, SPY, IWM, Dow Jones, etc., especially on the micro level, in the very short term. It's for me, recently, over the past, let's just say 2 to 3 years, when that kind of idea creeps into, really pay attention to the indexes, it's in very specific scenarios of increased volatility and very correlated market, usually highlighted by some sort of headline or macro event. Oftentimes, and when that correlation is there, then the indexes are key to analyze and be mindful of. But when there's not that correlation, when we're seeing specific groups, stocks, and industries and themes stand out, it can be very debilitating micro-analyzing the indexes, even on a day-to-day level, but especially on a minute-by-minute or hour-by-hour level. There's been more times that I've probably cut a trade short, or just kind of mismanaged or tinkered too much or hesitated because of some sort of random movement at the index level, or sudden fear that we need to consolidate, we need to pull back, or we need to clear this key level in order to gain participation. And meanwhile, right, the leading stocks are breaking out of bases, pulling back to key moving averages, and that index analysis is causing some sort of over analysis and paralysis about that. And I think that's a very common debilitating metric or whatever, theme throughout a lot of traders. So anyways, let me just kind of read down what I was typing. You've heard the phrase, keep it simple, stupid. Yet so many try to extract these intricate movements hour by hour of a complex combination of a variety of stocks making up the index, spending a majority of their time watching ticks of trillions moving in unison, looking for signal if they can or cannot take the trade in front of them. This is why the simplicity of the 20 MA trend brings so much clarity where otherwise there is confusion. And I put in this little exercise: map out all the trades that you took in 2024, 2025, and when SPY or QQQ or whatever was below the 20 MA. So just using that simple gauge, that simple metric, and you don't necessarily have to actually implement that. No trades below the 20 MA. I think that's also very arbitrary. But it's just an exercise to see how that would affect your P&L. If a majority of your losses came below that, and you could have completely avoided those by just implementing minimal or zero participation when that occurs, then great. And then when we're above, then you can have participation. So it's a good exercise, but it also, be wary that just using that isn't necessarily the greatest gauge of participation. It's just kind of one metric. And then I've got this kind of dickheadish quote that I think is kind of funny that I came up with over the past couple weeks, which was, someone was talking about trading, the indexes, and, particularly know that they, trade zero dated options on them. And, I started this phrase is, you can't even trade one stock properly. What makes you think you can trade 500 simultaneously? Again, kind of dickheadish, but I thought it just kind of got the message across. The other one is, the market environment is hot, if you're in space stocks, memory stocks, defense stocks, etc. And I'm like, that's the point, right? Is hindsight trading, or reviewing what is working in the market, is a more appropriate way of putting hindsight trading. Hindsight trading has a negative connotation to it, but analyzing what has been working in the market is a more favorable way of looking at it. I think language is important, and framing the context of information is important. And the way you speak about things, right? Instead of, the market's so choppy, right? So choppy, it's hard to participate. We're just consolidating, we're basing, we're gaining steam for the next opportunities, right? Such more positive way of thinking about opportunity versus, oh, it's choppy. It's just beating you up. It's choppy. I hate that. And same thing is, again, this hindsight trading. It's reviewing what's working in the market, right? And this is how you get better, right? Comparing and contrasting moves you wish you would have taken, should have taken, or are part of your system. In my opinion, how you get better and how you analyze what is favorable in the market. Specifically for me, I've spent a lot of time looking at KTOS, Carmen, and Mercy, all of which actually I posted in my channel as they are setting up and where they're going to trigger and what we're looking for. And all three of these gave literally perfect system trades for me. Like these are literally textbook, ideal, A+ model book trades for me. And they were on Friday, January 2nd. They all triggered. This was before Venezuela. This was before the $1.5 trillion deficit or defense spending thing. This was all before that. So, right, this is just a group setting up that is showing strength and about to break out of this, basing pattern. And again, consolidation, higher low, undercut of the previous candle, holding the 20 EMA and closing strong. All three of these gave that just picture perfect setup. And it has been frustrating to watch those specifically go. Granted, I've captured some really good positions that I'm happy about. Baidu, Planet Labs, Figure, Fly, Irene, and others. So I'm not like devastated, but I am incredibly frustrated about these three. And again, I've spent a lot of time looking at them because, again, they're very, very, very system trades. And at least, something that you should buy a partial position or an entire position at the close with the low of day stop on all three of these. And they're just trailing the 5-day moving average. Just incredible. So again, there's a major benefit to hindsight trading, and I can't wait for these to set up again. If they set up again, which they will, and give some sort of consolidation and a signal, I'll gladly get in and take what the market gives me on that. So anyways, that's just kind of my introductions and thoughts on how to become a better trader and just kind of general lesson on this Sunday scans. I like to start them out with that, just kind of to get me hyped, to get me going. It's all really just for my own thinking and my own journal, etc. Giveaway every week we do a giveaway of a full 1 year in the Discord for free. And we go through everyone who liked and restacked or retweeted or whatever the hell you call it. And if we reach a certain metric, then we pick someone that receives a free year. Been short the past couple weeks, so call your grandma, call your friends, and maybe you'll be the one to earn it. And then here's where I'm going to post a video breakdown. But we're going to run through here the schedule of economic data and earnings, some market breadth stuff, some ETFs, Bracco's section of his kind of a breakdown review and top ideas, my positions, weekly outlook, and focus list for the week. And then I don't have the broader list yet. I've got about 110 stocks on my broader list right now. I do want to narrow that down and send them out to the group here at some point this weekend. Excuse me. Earnings season. How we kicked off last week with some of the banks. We got Netflix on Tuesday after market close, and then Intel, ISRG, a couple handful of earnings this week. Not super exciting. Netflix obviously highlights it. Also, shout out to old heads who still say that Alcoa kicks off earnings season. You have been in the game. But I just want to highlight, map out your earnings gapper list of specific earnings, not just the headlines that are gapping up on earnings, and to track them throughout the quarter. A lot of setups end up igniting or starting from that earnings gap up, and we can get involved from there. Okay. And if you don't want to do that, both Chartmaster and myself do that every quarter, and you can at any time hit us up and ask for that list. Here's some economic events this week on the schedule, just PCE for the most part this week. Some of the market internals. Look at this start to the year in terms of the 4% gainers versus 4% losers. This is kind of what we're feeling in the market with the mid caps and small caps and thematic groups, thematic movers. is really dictated or depicted, I'm sorry, in this graph right here again of these first two columns. And what a breath of fresh air it has been. December was absolute dog shit in the market, in my opinion, and honestly most of November and October as well. There were some opportunities in there, but December was absolutely terrible. Brocco's market health tracker tracks put to call ratio, some VIX ratios, and some of the positioning and survey metrics in the market. Looking for some extreme readings in those to stand out. One thing that's really interesting here, so this is the percentage of stocks above the 5-day moving average, is sitting only at 57% still. So, although I do expect a bit of consolidation at some point, just given kind of the movement in IWM and the S&P, quite frankly, we're not seeing that the FOMO indicator from Matt Caruso reach some of those extremes yet. So, there could still be further upside. And on the contrary, if we do get some weakness, I expect it to be, rather quick. I think we will pretty quickly get to some of the extreme downside metrics of the stocks above the 5 SMA that we can, quite frankly, quickly buy the dip on and get exposure. Because I actually believe that despite the incredibly strong start, that maybe there's some people left on the sidelines that are going to be quick to get involved into those stocks that they desire to start the year. So we'll see about that. Percentage of stocks above the 40 SMA, the T2108 is getting a little up there, sitting at 65%. Usually in the 70s, 70, 80, 85 metric is where it gets a little bit weary. This is a very poor indicator for timing tops, and it's an extremely beneficial indicator for timing bottoms on this. So just be mindful of that. Percentage stocks above the 200 SMA sitting at 58%. Here, oops, let me just clean that little gap up there. And here's a seasonality chart. I always just enjoy looking at this and kind of gauging this. Typical strong start to January, very positive for the year, very positive for some metrics and historical guidelines for how the year is going to go. We usually have a little bit of late January weakness, followed by early February strength, and then late February weakness into mid-March before seasonality finds the bottom. Anyways, here's the indexes that I cover: QQQ, SPY, Dow Jones, SMH, IWM, MDY, ARKK, ARCX, blah, blah, you can read. So we'll kind of go through some of these rather quickly. Q's still stalling at this bearish gap here. I do expect the gap down to start the week, and we'll see if that gets bought up. My expectation is that it will. Again, not really watching QQQ as my primary metric right now, more watching IWM. And what else did I type? Yeah. That's about it. SPY Daily still looks good. Watching for us to break 696 highs. I like that we're holding 690 previous highs right there from late October. I like that we're putting in higher lows on these sells. I like that we're holding the 20 MA here. And I'm paying attention to around this 685 to 688 a bullish gap as well. Dow Jones still trading in this channel above the 20 MA, consolidating just below highs. SMH, what an incredible rally we've seen out of this consolidation. A lot of really impressive performance from some of the stocks: Lam Research, AMAT, TSM, S&D KMU, and a few others. Of course, we have AVGO, NVIDIA that are lagging, and that is something to be mindful of. But so far, not rearing its head at all. Again, maybe it's a little long in the tooth in the very short term. Could use a little bit of sideways. We'll see. IWM. I absolutely just still love this chart. And I encourage people to go back over the past since October or November, when we kind of started consolidating, and just the general message of how to look at IWM through that consolidation on the monthly and weekly time frame, and the excitement of it going into the end of the year and the beginning of the year. And it's played out literally perfectly with this double bottom over the 245 level, the highs from 2021, 2024, forming this double bottom, and then just launching off of this with a massive move in the first 11 days. start the year. I'm extremely excited to see how this consolidates. We're trading at all-time highs, well above all-time highs. We're established above all-time highs. If this gets a nice tight, like a little flagging action out of this, I think it could be just an incredible opportunity. Same thing with these mid caps here too. And you know, we're one of the things that maybe this is true, maybe it isn't, but it's helpful for me to think this way. Is okay, let's say they are rotating out of the Mag 7 stocks, you know, concentration in those, which seems to be the case, right? Those are massive weightings in the market. We're seeing that depicted, or by the way the QQQs is moving, right? It's lagging because of Meta, Microsoft, Apple, Nvidia, right? These highest weightings in the market, massive concentration, in fact, historic concentration. And we're seeing some of that kind of flow out, right? And we're seeing the strength in the mid caps, IWMs, the specific thematic groups, and industry ETFs. Okay. Think about the math of that. These trillions and trillions of dollars of market cap. Obviously, they're not, the weighting of those are not going to, you know, go drastically down. But even a sliver of that to go into some of the small and mid caps, even let's just say, like I said, a sliver of that market cap weighting and concentration and positioning to shift into some of these lighter stocks can cause a massive move in 2 billion, 10 billion, $40 billion companies, just by math. I mean, Nvidia is a $4 trillion company. If 20 billion, you know, I'm just kind of using it. I could go out and, you know, make some crazy numbers up, but and it might not even make sense. But I'm just saying, it seems logical that the impact could be potentially more explosive than people are aware of. And I think that's the case. I hope that's the case. And I'm prepared to take action if that's the case. And of course, if it doesn't, right, if, you know, volatility comes, we start losing down. I know how to manage my risk. I'm extremely good at maintaining my drawdown. And, you know, hopefully, you know, I'll be able to continue to make those proper decisions when they come. That's all I can really hope for and prepare for. But you know, encouraging that, you know, exciting upside. Anyways, I put in a bunch of ARK stocks. I don't really know why I did that, but I love me some Kathy Jones. Anyways, ARK, ARKK needs to get over this 84, 85 level. Space exploration ETF. Obviously, we know the you know, strength of ASTS, Rocket Lab, Fly, Lunar Planet Labs, etc. And this is a chart of the ETF. Just, you know, exceptional move. Even going back to when this was, you know, $16, $17 the ETF. Just something to continue to track. ARK's AI and robotics ETF, up 17% on the year already. Big extended, could use some consolidation. I expect it to be orderly. ARK Genomics ETF. Actually started a little position in this in my Robinhood for some 2027 calls. I like the way this broke this downtrend and it's kind of trying to build this little secondary higher low base right here. Let's see if that starts to work. I've always liked the genomic stocks. And anyways, PBW is a clean energy ETF. Stocks like BE, FLNC, EOSE, TE. There's also like Generac in here, PWR Quanta Services. Just a very diverse list of kind of energy or infrastructure stocks, battery stocks, grid stocks, off-grid stocks, behind the meter, you know, all sorts of different things in this ETF. It's a really good one to track. And, you know, like I said, if you just break down what's in this here, in fact, you know, we can do that, you know, really quickly here. PBW on T6000, you can just click this right here. So yeah, TE, NVTS, AMPX, FCell, BE, EOSE, you know, just LAC's in here, QS, SEDG, FSLR, Tesla's in here, LAR, XPEV, right? It's just a really cool ETF. Anyways, back to this. Defense ETF continues to, you know, trend strongly. And then, you know, I put in software. Earnings season for the software group is going to be really interesting to see if they're actually within the company are fearful of the impact of cloud code and right the kind of AI services that are seemingly destroying these stocks and companies within. So I'm really curious in that if they are seeing some sort of negative impact to their earnings or to their guidance. Or if it's the opposite and they're very upbeat, confident, and whatnot. There could be some big moves in this group. Something I'm just kind of watching sideways to see if there's any headlines that stand out. Emerging markets continues to break out and trend over this 20-year high. Home builders, really nice thrust here. Want to see his flag, and I might buy a nail if we flag out here. Healthcare ETF continues to consolidate. The Buttcoin here has got a nice little EMA crossback right here over this base. I think it's about 94K there. Just generally curious if we put in a higher low and go and break out and push up towards the 100, 105 level. We'll see. Same thing on Ethereum. Brocco's section was really awesome this week. I encourage people to make sure to read this, but he goes through his awesome entry on FIGR, and not only that is his breakdown of SNDK a few days prior that made him really recognize this opportunity. But he bought figure at 49.81. I got in figure at 49.94 based on the same signal. And guidance from Brocco that he walked the group through. It was incredible. This was the intraday action, just, cascading, selling, and capitulative action right here. And, he found just a really good spot. He's got just a third eye for these sort of setups. It never ceases to amaze me. I look forward to when they pop up. And then what happened afterwards was just insane. So this was this day. This went on to go from 49.80 all the way up to I think 70, 76 it got up to. I know it closed just under 75, but I think it's got up to 76 this week. Just incredible. This was kind of the model for the trade. Was just recently was this SNDK, how this waterfall into support after its really big breakout, he just kind of replicated essentially the same setup just a few days later, which was really exciting. Like I said, he's got a third eye for these sort of comparisons, these sort of models, and playbook structure to his trades. And he goes through some of the AGQ and SLV action, which was quite honestly, based on this, significant burst move, incredibly viable setup and trade opportunity. I think it was incredibly difficult the way that price delivered. If anyone maybe got chopped around a little bit on this, I think that's very understandable because it being silver commodity, just extremely challenging. Little shameless Discord plug. You can use code Substack 15% off forever. Encourage you to do that. Live trading every day. Really active in kind of education and mentorship, guidance, and kind of helping you, like I said, develop your strategy, stick to your strategy, maintain discipline, and just kind of navigate the intricacies of the market. So if you want to join, hang out with us, trade with us, I encourage you to check out that link. Here's my current positions: Planet Lab, Figure, Baidu, Fly, AEVA, Irene, Poet, BEALB. Like I said, I also have some ARCG. Got some legacy positions in Hood, SEI, NVIDIA, Amazon Meta. And then retirement portfolios concentrated in IWM, EEM, and of course US tech large caps. I closed Reddit and Tesla this week for a nice profit. Nothing special. I was in Reddit for quite a long time. I was in Tesla for a very short period. Captured decent gains on those. It was nice to book them, get them on my account. Took a loss on Open this week and INOD. I think it was on Wednesday. They didn't act how I wanted to, so I cut them. Small losses, I believe 1.5% on each of them. Traded RR early in the week. It was an idea from Sunday Scans. and gave me the signal I wanted to. Then it started acting a little goofy. I ended up closing it for just over 5%. It didn't necessarily give me the confidence that it deserved to be in my account. So I listened to my gut. I listened to my instinct. I listened to my analysis and cut it for 5%. I was very happy because I my stop would have ended up getting hit. And I trimmed some portions into strength on PL, Figure, Irene, and Fly. Just insane moves, quite honestly. 33% on Irene, 47% on Figure, 49% on Fly, 138% on Planet Labs. Baidu, I think, looks phenomenal. Still long from 124. AEVA, still long from 1680. Still unsure about this one. And then Poet had a nice little move this week as well, just with the general market strength. Use some of these staples. I've still got $100 calls for ALB. And by the way, ALB is sitting at 163. Here's where I got in at the end, middle of September in ALB when we were about $80 on the stock, and been riding these $100 calls for January 2027 ever since. And the stock's doubled. The $100 calls are up, I think, 700% or something, 650% right now. Super excited about that. My approach, quite simple. If you see a setup, take it, narrow your list, get organized, focus. Some of the best are already kind of moved. I need some consolidation. I've got a good position. I'm happy, but always stay hungry and attentive for more and the kind of next up mentality when that consolidation comes. Earnings, PRs, and gappers will be valuable to pay attention to. And like I said, get organized, stick to your strategy. And again, just stay focused and confident, and there's nothing you can't accomplish. That's me talking to myself again. Weekly outlook. Curious what the impact of the policy objective around Greenland has on the market. With the 10% tariffs slated to go to 25% in June, and then the European Union's response, retaliation, or I don't want to say their response back about it is going to be really interesting to kind of watch the dialogue and the back and forth and the impact on the market, a little tug of war if that occurs. Like I said, my expectation, if there is some sort of weakness and volatility, is to be prepared to capitalize on the opportunity afterwards. I actually think if there is an impact, it's going to be very brief, and there's going to be people that probably wish they got involved in specific things, and so that's going to be my plan, to get involved in certain things, so I'm not one of the ones wishing. And then here's my watch list. I'm looking at NBIS, CoreWeave, OKLO, Baidu Baba, LEU, LAC, Chime, NXT, Joby, and USAR is my primary list. NBIS, really want to get a piece of this at some point. I like the way it's been holding $100. I like these two bullish open gaps. I like the way we're over this base. I like the way that we got through that 95.72 high volume close from the Microsoft deal, and the way we're building out. Also, there's a little subtle PR in this ClickHouse, which NBIS owns, I think, 30% of, or 25%, somewhere in the middle there. They had a increased valuation in the recent funding rounds, private company, and like I said, NBIS owns about 30% of it. So just that stake alone, adds to the value of NBIS. They also own Toluca, or whatever it's called, and AV Ride. This is a company, again, I've followed incredibly closely since late 2023 or late 2024. I'm sorry, when it relisted, and I've made a significant amount of money on this stock throughout the past year. One thing about it is it's interesting to where to place this stock in terms of how it's behaving. Right? Is it part of the OpenAI Microsoft complex, and like Oracle and BE and that kind of stuff, and it's lagging a little bit, some of that move? Is it part of like an Irene and APLD, and it's also lagging? So it's an interesting place to put it. I'm just going to treat it as its own thing and trade the stock. Which I think, again, keeping it very simple, the stock you're trading is the stock you're trading, and I think that's the most important thing, right? Where's your stop? What's your idea? What's your position size? And let's ride. Here's a weekly log scale. I've been posting this in my channel various times throughout the past few months. because this does not look like a stock that's blown off and topped. In fact, it looks like a stock that's just basing and set up to go higher. And if it starts to behave that way, you're going to want to be involved in. Just know that. Excuse me, CoreWeave. Close week up 26%. Really awesome wedge pop on this that I've got circled through this base. Run really quickly right away at Monday morning. Then kind of built out a couple inside days below. It's like $90 level in this base here. I really like this double bottom look. And the move coming out of it. Don't have position, really would like to get involved in. Want to see some consolidation, some build out, some tightness, and then we can get going. OKLO, so it was a little controversial. Some people in the group maybe disagreed with this idea, but very simple, again, kind of system trade for me. It got a big headline with Meta and a bunch of stuff on January 9th. Gapped right up into resistance about 115. Sold off since then to back to about $90. And it's pretty reasonable after about a 6-day move to see that rejection on the gap up, or at least be like, okay, that's explainable. And now we're kind of drifting in on low volume into the 9 and 20 May as they cross and converge, and we're putting in kind of a little go signal-y candle right there. So if that holds and we build out here, I'm actually going to be watching the hourly right away at Tuesday open to see if it does trigger, because I'll take this right away Monday morning with a stop at Friday's low. And if you decide to get in on Friday, I think that's very reasonable as well. I think a solid setup. The probability of it working out, given the fact that I do think this has potentially topped, but we'll see. Bloom Energy's back at all-time highs. Again, something I'm interested in. Call me stupid, or what, disagree with me all you want. Here's what I care about: stop at Friday's low. Simple as that. Baidu and Baba. Manrev and I have got a little competition about the performance of Baidu versus Baba. I'm Baidu, he's Baba. I'm currently winning. For the record, and Baidu looks phenomenal, consolidating just above this left side peak here from October, holding up two bullish open gaps at about 144 and about 147, and I really like the way that we're building out here. If this decides to break out, I think we're going right up to 160s and 170s, which is my expectation. As of now, I'm trailing this up the 90 May and the 20 May. I've still got essentially my entire position. I took a slight trim up at, I think, 150 on this big gap up day of about 1/10 of my position. But I'm just going to ride this. The moving average just stopped me out. Simple as that. Worst case scenario is I come out of this with a 15% gain. And then Baba looks phenomenal as well. Nice break of this downtrend line and really strong push. And now we're kind of flagging out, looking for that next higher low. I will gladly enter this as well, despite my competition with Manrev, which I will win, by the way. I got LEU on my list here. I like the way it's consolidating above 300 and above this base at about 280. Kind of wicky, kind of a little wide and loose. A nice inside day would do this a lot of justice, and something that I want to keep my eyes on going forward. LAC, so this was featured in Sunday Scans last week, and quite honestly, Friday this gave a really good trigger on that lower wick and hold in this area. But again, I really want to kind of hammer through that I don't think that it's gone, just because I think Friday is probably the ideal entry and the invalidation point is Friday's low. I don't think that it's gone. It's later. It's chasing. Okay, the U.S. government bought a stake in this company. And that's what caused this massive move from about $2.80 up to about $10. Okay. And we've been basing ever since in the $4 to $6 range. Okay. I know with this Greenland stuff and with rare earths back in the main conversation, we're seeing things like USAR, CRML, MP, and a variety of other things kind of get pushing. I think LAC has to be at the forefront of this conversation and looks incredibly exciting. $6.01 is the high volume close price from when the government took a stake back here. And if we get through that, I think we can easily push up into $7.50 to $8 and possibly even get new highs with the proper momentum. Here's Chime. We got a weekly, 5 weeks tight on weekly as we are crossing back into the 9 and 20 as they're converging, following a, guess how much this moved after lows? Following a 75% move off the lows here in this weekly thrust. That's incredible. This stock moved 75%, a couple weeks sideways into moving averages as they're crossing and converging. On the daily, we had a little bit of a fake breakout out of this base and a squat back into the MAs here. It might need one more little fake, little dipsy-doo dunkaroo here, but I think this will be potentially actionable if we get a little undercut and go type of move on this, this little fake breakout squat. NXT I got on the list just because I think this kind of reminds me of KTOS. I actually want to switch over to TC2000 for this. So NXT here again. So the reason this reminds, where'd my mouse go? The reason this reminds me of KTOS right here. KTOS kind of built out this little base, chopped around a little bit, kind of put in a little higher low, and then kind of push. Same thing I think on, what was it, KRMN? Maybe Mercy. Yeah, KTOS. And I think NXT might be kind of trying to do the same thing here, where it kind of got this choppy base here, pops through, flags out. At least if I get a signal like that around this area, I will gladly engage that this week, and we'll see. And actually, this TAN ETF here, I've seen a lot of talk about this, and it does look really good. I just have struggled to find individual stocks that look attractive in it. NXT is obviously the best one. FSLR has just been absolute dog shit to trade. Run looks like crap. Anyways, if we have to be interested in solars, which you don't have to be, this NXT just looks interesting. So it's going to be on my watch list if it gives me a signal. Joby. I think this looks really solid. 1601 triggers upside on this. But I kind of want to bring up just a general topic on this. I know this gave a few people headaches last week. They're buying, high 15s into strength last week, looking for this to break out of its flag. And what I want to mention is trading from a position of strength by buying supports, buying undercuts, buying shakeouts, and quick reclaims of those levels give you that strength to where all that matters is your position sizing and your stop, right? Not, it's got to break this level. It's got to break 16 to go. It's got to get some momentum and hurry up. That really doesn't matter. That's trying to project control and control the outcome of the trade and the quickness and the burst of it, rather than controlling your stop, controlling your entry, controlling your position sizing, which is specifically what we can control as traders. Not it broke 16, so it needs to get going right away. I understand that breakout momentum is important for trading, and it's a big part of my trading as well. But trading from a position of strength in getting into these moves when they shake out and hold into key support levels very close to that true invalidation spot of the chart is significantly more beneficial and healthier for your psyche than forcing it to go now. The confirmation trigger, the confirmation is driving me nuts sometimes. Anyways, probably sound like a crazy person, but I am. And then I got USAR on this list as well, at this base with the Greenland stuff going on. Again, I think rare earths are going to be at the forefront of the conversation, as they have been recently. I also wanted to bring up PPTA and CRML in this conversation. We've also saw some comments from a variety of different government officials. I think it's like the mineral czar or whatever the hell, talking about how they're going to be investing hundreds of $billions into mining and critical mineral resource stuff, blah blah blah. But it was really exceptional commentary. To just keep, continue to keep focus and excitement about this sector, UUU. And then I wanted to bring up this PPTA again, which is kind of what got me bullish again on rare earths, following kind of the collapse after positive conversations with China. But it is PPTA because JP Morgan took a stake in this via their United States Resilient Fund or whatever the hell. Actually, hold on, what's it called? I want to look this up. Their American Security and Resilience $1.5 trillion investment initiative. The first company that they bought a stake in this American Security and Resilience initiative was PPTA, one of these rare earths and metal mining companies. So just something to be mindful of. And then CRML, USAR, both look phenomenal. So that's what I got. I know I went long again. I promised myself I wasn't going to, but thank you if you're listening to this. Special shout out. If you're listening to the end of this, send me a DM with my name. Send me a DM that says Patrick, and I'll give you a 50% off discount for the group. You hear that? So I'll know how many DMs I get if you actually listen. I'll have this posted in a couple minutes here. So over and out.